Hello, everybody, and welcome to episode number 17 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Beanbag Trader. And I'm joined here by my nefarious co-host, former market maker of 20 years on the infamous Howe Street, a first-class educator of market profile who is rumored to be Jim Dalton's oracle, a man who has more stories than Charles Dickens. You can call his phone number 1-800-DGEN when you need your bad trading habits fixed. The proper villain, talking about JJ. JJ, how's it going?
Good, Ray. How you doing? Jeez, you've outdone yourself on that one, I tell you.
Oh, man. Well, 4 shots of espresso, 30 milligrams of Adderall. That's what you get. And so, JJ, we had a little bit of craziness last week in the market. How's your trading been since then?
I took a couple of days where I didn't trade for sure. I didn't like the price action. I couldn't see it. And I kind of let that go by. And then, slowly started getting back into it. I found today I was completely not prepared. Last night I lacked discipline and didn't do my prep as well as I should have. And, I realized that, pretty much early in the day, I wasn't seeing things. I was hesitating. I was not looking at things the right way. I was getting fixated, on a poor high, for example, and getting very, very long biased when I shouldn't have been. So I took a couple hours and started writing out what's going on in the market, started going back and looking at references that I should have looked at the night before. So I would have been more prepared. And, then later it improved. I, caught a couple of ones there off the, when inventory got too short and we moved back up. But, it happens to a lot of people. Your ego, after a while, you see the market and you're like, oh, okay, well, maybe I don't need to, I've got it, and it's a good thing I didn't trade on that. And it took me about 3 hours for my brain to actually wake up this morning and see it.
Mm-hmm.
And that sometimes happens. Sometimes I can see it right away. I know it's going to happen. And then other times I have to wait. And, other people in the room, which is great, will see it. People who haven't even been trading using Profile to organize order flow, they haven't even been doing it for a couple of weeks. And they're picking up things that I've missed, which is great, and I love that.
Yeah.
It's they're making the move towards independence for me, which is the goal, right? The goal of me teaching you is to make you independent, and for me to be obsolete. That's the whole goal of this. And I really, I was really happy about that. So while I wasn't, a rock star trader today, a couple of the newer people in the room were, and that was great. And they exercised good trade management. And they managed their expectations on the trade. They knew it wasn't going to be a home run, so it was a little bit of hit and run trading here and there, and they did that. That's a really nice thing to see.
For sure, it is. And now, are you positive? Like, are you sure that your lack of seeing the market develop this morning the way you thought it was a lack of your preparation yesterday, or just sometimes you know how it is. Just sometimes we don't see it.
Well, I just wasn't with it, and I wasn't, like this morning when we sold off, I was too focused on the gap fill and not looking towards that, PM rally high from yesterday, which we hit, went one tick below and had a nice responsive trade off of that.
Right. Mm-hmm.
I missed that like like an offensive tackle missing, or a pulling guard missing the pull. I missed the whole thing, right?
Yeah.
Slow feet, the whole 9 yards. I didn't see it coming, and when the quarterback got pancaked. So it happens, right? The good thing is that I I had the self-realization is like, oh, wait a minute, Peanut, your brain's really not firing on all 12 cylinders.
Right.
Maybe take a step back, and maybe you're not as smart as you think you are before you put the money on the line.
Yeah.
So
It's
that I tend to be overcautious, and sometimes that really keeps me out of trouble.
yeah,
Sometimes it keeps me out of good trades too.
yeah.
But that's what I've learned, and then it kind of recovered a little bit. So we'll see if it's kind of been a long week too, and I think my brain's getting a little tired as Friday comes.
Yeah, this is a performance sport, man. We have to come bring our like A game every day, and if you don't
Definitely.
have it, like you said,
Yeah.
if you recognize you don't have it, hey, take
Yeah.
it easy. You know what I mean?
Yeah. Exactly.
So good
You
stuff, good
know.
stuff. Yeah.
Yeah.
And so today, we wanted to discuss the Aramco IPO. What you see now has got delayed. I mean, they wanted to roll it out like in November, JJ, but I think now
Yeah.
they delayed it right to December, January.
Exactly. I mean, for me, this is really cool. They're valuing it at 1.7 to $2 trillion. That's a lot of cabbage.
Yeah.
Even in this unicorn free money environment that we have right now, $2 trillion is a lot of cabbage. And for me, it's kind of cool because I want to see how the process works. We weren't alive when U.S. Steel went public, and it was the largest corporation to go public, the first $1 billion valuation back in the day. I'm curious to see. I guess they're going to IPO it in their domestic market,
Hmm.
um, in Saudi
I'm sorry.
first, and
Yeah, right, right.
yeah, and then maybe I've seen rumors of Tokyo. I don't know if that's true or not, but I'd love to see it on the New York Stock Exchange. That would be very cool. You
Yeah,
know,
yeah,
um,
yeah, yeah. No, it's crazy. Like because they just had what there was an attack on like two of their facilities or two attacks on one of the facilities that
yeah.
like I mean, how does that affect, you know what I mean, the bringing this, public?
Well, that's the thing. I mean, there's a lot of transparency that investors are going to want to see. And people who don't really understand that process, it's pretty cool. What they do is they call it a dog and pony, and when they publish their registration statement or their prospectus, it lays out basically what's going on at the company, what they're going to sell, where the bodies are buried, all that sort of thing, and then they will determine after sort of shopping that around. Um, they'll determine whether or not they actually will move forward with the IPO if investors are receptive to what they're selling.
Hmm.
Otherwise they just take their ball and go home. So that it's a very very interesting process, and this is sort of the second delay, and we'll see what happens. I'm very very curious. The oil market to me, I find, you know, uh, you know, the stock market is interesting and futures markets, but the oil market has this sort of air of mystery, and you read about characters like Mark Rich and guys like that, and how they manipulated these markets or made markets or created markets or whatever the heck they did. It's fascinating. There's like this layer of intrigue, all these oil traders hanging out in these hotels in Zurich and Geneva and things like that. You hear about all the stories, especially when I worked trading for Swiss bankers. They would tell me there was all sort of like a spy novel kind of wrapped around the oil market, which is kind of cool. There's
Yeah.
always, it keeps things interesting.
Yeah, it does. It does. And, shout out to all the Saudis out there, we ain't trying to be controversial, you know what I mean? So we know where they're listening into us. Now, Jay, how does the volatility, I don't know. And we don't know. I don't think we know the answers to this, but, I just wanted to ask you because as from somebody now, were you involved in IPO deals when, like, on your time on Howe Street?
Well, yeah, we did. I mean, we did reverse mergers. We didn't actually do the traditional IPO because the size of the offerings that I worked on were not big enough to have an investment bank do an IPO.
Okay.
Um, Nowadays it's funny when you see companies that are losing all this money. I'm like, well, some of these tiny little mining deals. I mean, they actually pulled some gold out of the ground. They had better earnings than some of these large scale deals. But I guess the whole thing is now they're trying to sell. Oh, it's the vision of the future, and these are unicorns and all this nonsense. But No, we did what we did was, in the old days, they'd take a deal and they'd reverse merge it into a shell company, which is a dormant trading vehicle, which actually has no operating business in it.
Hmm.
And then they'd reverse back the stock, issue new stock to the people who invested, and off they'd go. So
Yeah.
yeah, no IPO, which itself, So when I got out of that industry, it was interesting to talk to people who actually, who say been a specialist on the floor of the New York Stock Exchange, who managed that whole process.
Right.
It's fascinating how that all works.
Hmm. Hmm. I was reading like people were questioning, them going public in the first place with them comply, with the compliance laws and rules, et cetera. Like, how do you think like the volatility, of the country, and even just that region will affect this deal possibly?
Well, when you do these big deals, um, looking at this from just a sort of black and white point of view, you always look at, do the people who are taking this thing and floating it publicly, do they have what it takes to support that stock? And they do. I mean, they have vast, vast financial reserves.
Hmm.
And I wouldn't discount them. What I'm curious to see is how the whole mechanics of it all works out, because I'm kind of a stock mechanic.
Right.
I want to see how it's traded there, how it's traded on other exchanges. It's interesting to see, how U.S. order flow will work going to that exchange to actually, to buy stock. It's very interesting. Because we've had what I read that since 2015, there's $20 billion in inflows into the Saudi market. Um, so I'm curious. I love cross border trading because I did a lot of trading between Germany and the U.S. When we were selling a lot of stock to Germany in the 90s.
Hmm. Hmm. Sure. Now, crude oil is what's the symbol? CL, right?
Yes.
And see, now I know you've been looking at it on the TPO charts. How's it look structurally to you?
Uh, the way it looks, just I do not trade oil, and so I have to preface this. What I like to do is, I'm solely a mini ES trader, and that's how I've learned market profile. But what I've started doing, because other people, have asked me, can you check out this market and look at it? So I started looking at the Russell. I started looking at the crude oil market, some currencies, gold, silver, and I was shocked to see how technically accurate profile references are. I haven't traded on them yet. I've just played around on the simulator to test different theories and things like that. And I just haven't had the time to throw myself in it. Also, I don't know the underlying mechanics of the crude oil market. I know the mechanics of the ES because it's based on 500 stocks.
Hmm.
And, I know the mechanics of trading and settlement very, very well because that's what I used to do. So I'm a little bit cautious to just jump in there, but
Right.
from what I can tell, it's nice because you can look at balance zones, look above balance and fail, come back in and target the opposite end, and these markets are very technical.
Hmm.
It's quite fascinating. Yeah.
Yeah, yeah, no, it really is. I mean, it's interesting. I mean, at least I know me and you haven't looked beyond, the ESR. I know you have, like you said, dabbled a little bit, but Jim Dalton says it works for pretty much anything. I mean, he used it for real estate, like, that's crazy. That's fascinating to me. Um,
That is.
yeah, just one more thing before we move on to the next topic. And what's your take on the whole state of the IPO game?
Um, well, it's funny, we've seen some IPOs not do so well. We saw WeWork cancel their IPO. And today, the first time I saw people talk about perhaps, that company is going to run out of cash and have to go bankrupt. So from having a valuation of $47 billion to this in a very short period of time, I think people are recognizing that because we have this unicorn, you know, um, nothing but cotton candy and rainbows, free money, let's take this cardboard box public. And I don't mean to insult, the Silicon Valley types and the entrepreneurs, but you know, I don't know, leasing out office space really didn't seem like that big a deal. And letting people, have a cup of coffee. It just, I don't know how they were going to change the world, and I might not have the intelligence to figure that out. But, when you're burning through that kind of cash, um, it scares the living hell out of me to see these CEOs just burning through cash. Like I've seen, stockbrokers high on cocaine that don't spend this kind of money. I mean, like, what's the deal? Like, how could you lose $3, 4, 5 billion? Where is this money going? What are you doing with it?
Hmm.
Right? I just, I sound like the crazy old man that's yelling, "Get off my lawn!" But I don't understand how these people are spending this much money and not producing earnings, and people don't really seem to worry about it. Oh, it'll make money. It will. Don't worry. Okay, good luck. And then it's just crazy. Also worried about the narcissistic tendency of some of these CEOs to have a god complex.
Hmm.
That's a scary thing. I mean, that you're taking OPM, you're taking other people's money. A little humility wouldn't be such a bad thing. You know. Um,
Hmm.
and I think people would appreciate that a little bit more than calling yourself some sort of Svengali.
That's golly. All right. Well, so moving on, we have a fun segment now for all you degenerate listeners. We're calling it Stories from Howe Street. The infamous Howe Street, the director of Dirty Tricks, conducted his business on. So, JJ, what story you have for us today?
Well, I have a story about a lawyer who was quite a character, who was a client of mine, and a character that we shall call the Golden Bear. And the Golden Bear was a guy who grew up in the industry with me. He worked for an old time mining promoter when I was working in marketing. He went the promotion route, I went the trading route, and there were legends of his exploits on Howe Street as he would, just you know take money out of people's pockets. And he had quite gotten quite a bad reputation. And I never had him as a client, but we were always friendly because we started in the business together. Coming up, he was a big guy from northern Canada. He looked more like he would be, more comfortable on an oil rig. But he was squeezed into a suit and selling stock, and he did quite well at it. But he destroyed a few people, and that does happen on the street. You take stock from somebody because you got to pay your bills, and you sell it instead of generating buying with it. That happens all the time. Because zero cost paper always finds the bid. Always remember that. And so the Golden Bear one day, we were talking, and there was this lawyer who was unfortunately had found himself, in a wheelchair, and this guy was supposedly a mining stock promoter, and I just knew he was kind of sleazy, and I didn't want to have anything to do with him. He lived in one of these buildings and operated out of a building where his office and his home were in this, condominium tower where it was really high security. You needed a code to get to his office, and people would come and escort you up and down. And it was the same building that the fugitive financier Rakesh Saxena lived in after he
Mm.
stole a couple of $100 million from Malaysia or Thailand or one of those places. So he had this, and I always kind of avoided having Vancouver clients. We're scheduled to have one of them on another podcast coming up, but there were very few guys in Vancouver that I did business with. I would go drinking with them after the close, and they were decent enough guys, but I knew that they would stick me with a debit sooner or later,
Hmm.
because that's just the way it is, right?
Hmm.
And most of them, we called them rounders. They were just, they were good time Charlies, and, most of their buying never stuck past 3 days in settlement back in those days. So so the Penguin wanted to buy a block of stock off this lawyer because he said he was a good criminal. and he would move the stock higher, right? This is how the Penguin, his due diligence, the fundamentals of the company really didn't matter. What he would do is he would find a good criminal who had to move the stock higher because he had a very, very high lifestyle, 2 or 3 girlfriends, a couple of ex-wives, and some houses all over the world, and probably a drug habit that he had to pay for as icing on the cake. So these guys need to move 50, 100, 200, $300,000 worth of stock every month just to pay all the bills, because God forbid they don't drive a Ferrari, right? So he had gone to this lawyer's office and he dragged me along, the Penguin. And, next thing you know, this guy becomes a client of mine, and I didn't want to take him on as a client. Within the first week, he had loaded me up with $60,000 in debt because he was using the stock he deposited in his account to, and we used that as margin back in those days. And we had 13 days to pay for a trade in Canada, right? As opposed to 3 in the United States. So you can tell why U.S. stock promoters loved Canada, right? 13-day settlement. You have 13 days to pay for a stock trade. You can trade that stock 20, 30 different times between different houses.
So it was a T plus 13.
T plus 13.
Yeah.
So naturally, 13 days is coming due, and of course I can't get this guy on the phone, right? And I'm like, where is this guy? And he had this assistant who hated my guts, and this guy just had a bad attitude all the time. So I called him up and I said, listen, where is he? Oh, I go, I'm going to have to sell out the account, which means sell the stock that he deposited plus what he bought, and hopefully, get, and hopefully the market doesn't collapse. Otherwise, I have to pay, the brokerage firm what's owing. And a lot of people don't realize that. But back then in the brokerage industry, when your clients make trades and you make commission, the brokerage firm takes half. When your clients stick you with a loss, you pay the whole loss. The brokerage firm does not cover half your loss, right? So, brokerage firms and the retail broker or the trader who had accounts, they're very much like your pimp, right? They take half, right? And then if it's bad, you take the whole thing. And I was looking at $60,000 that I had to pay off. So I decided, I'm going to sell out the account. And then all of a sudden the Golden Bear pops up and says, hey, I hear you're long this thing and he owes you money. And I'm like, yeah, okay. He goes, well, I'll put some bids up and you sell into my bids and I'll take the debit off you. I was like, wow, this is like, generosity. I mean, wow. And this is a guy who destroys everybody in his path, right? Why is he doing me a favor? Okay, we're old friends. I mean, I was so turned around by the event, and I was so worried about getting this weasel to honor his debit, and he was ducking me. I just sold the stock into the Golden Bear's bids. And of course, he was short the deal, right? So, I sold out the lawyer's account into his buying. He covered his short probably at a nice profit.
Yeah.
And and we were friends ever since. And I'd always defend the guy. Because but always remember, folks, that everybody has an agenda in this game. Right. So, even though he did help me out, his agenda was to get that stock, and I puked it out way cheaper than this guy would have. And then of course, the lawyer calls me and threatens me and all of this stuff, because I sold out his account. But I mean, I did what what was proper accepted protocol. But always remember that there is there's always an agenda. The interesting thing though about this guy though is even later in, as deals went on and he'd work on different deals, you'd one day get a FedEx and, he'd send me, 50 grand worth of stock for Christmas, So yeah, it was just, he was just one of those characters, right? And Howe Street was like that.
Yeah.
So,
shout out to the Golden Bear. What's he up to these days?
I hope he's I hope he's up to villainous things. Flying around on his private jet. He is a big fan of the private plane.
Yeah.
And certain islands in the Caribbean.
Hmm.
And let's hope he's down there enjoying the best of them.
Yes, well, let's hope so. I would love to have the Golden Bear on the podcast. We'll have to reach out to him.
A lot of these guys, man, they live in the shadows, right?
Yeah, yeah,
They
yeah.
live in the shadows. They don't exist. They don't really exist. Definitely not to the tax people and tax people, ex-wives, things like that. They have a tendency to disappear into the ether.
Oh
You know,
man, that's funny. That's so for all the listeners. That's why JJ doesn't show his face. That's why every person he talks about has a nickname. No real aliases, of course.
exactly, exactly.
Funny stuff. Good stuff. So jumping back on topic, this is a topic I'm excited to talk about. It's something that is real relevant to me now, being a new trader and learning. Now we're talking about managing trade expectations. And I feel like this topic, JJ, doesn't get enough shine. Now that I've developed my technical skills, and I still got a ways to go, but I find my biggest struggles right now are surrounding this topic. So what does managing trade expectations mean to you?
Well, a lot of it is trying to figure out the type of day that we're having. And that's been kind of tough lately. We've had trend days turn around on us.
Hmm.
We've had gaps and bad structure, and then you get a tweet and that messes everything up, and so it's been kind of hard that way. But what I like to do is when the market opens up, within the first 5 to 15 minutes, it usually starts to tell you what kind of a day it's going to be. The first little bits of what we call market generated information start to flow in. Once it gets down to a reference, does it tag that reference to the tick? Does it get front run by a tick or two? Is there responsive buying? The sort of the price action back and forth, is it choppy? All of those sorts of things. And then, what Peter Resnicek taught me was to look at market internals for context. So sometimes, you might have a balanced day and we might hit the top of balance, and, your natural reaction would be to short that and then look for the bottom of balance as your target. But, maybe the selling is really, really light. Maybe we are front running certain visual references like half back, or even the top of that balance. It might not hit it to the tick. It might stop 2, 3, 4 ticks short sometimes, right? So when days are like that, I tell people to, not wait for the home run. If you see that price action, there's no follow through, right? And after a while, you'll start knowing, you have a trade on, but the internals aren't really that strong. The tick's really not that moving. It's kind of moving up slightly. It's kind of, the bid's moving up a little bit. It's creeping along. You know, manage your expectations, especially new traders. Learn that price action means you're not going to get a home run. You might have to take a base hit, but hey, base hits, they build the account. And there's a lot of people who say, when you're on a run, press it and things like that, but that's all dependent on the context of the market, right? And
Hmm.
your risk management and things like
Right.
that.
Right.
You know,
And correct me if I'm wrong, but I feel like, in our trading room, our educational room, it's like, oh, people are like, oh, this is looking like a trend day, because you're saying look at it early, try and get an idea of what's going on, but it can also be very tricky, can it? Like, because we've
oh
had days
yeah,
where we thought it was going to be a trend day just for it to
to turn
revert
around and just collapse.
and just
You
collapse.
know,
Right. Right. So
you know.
it's like, how do you? Because it's like everything in context, right? And this was even something we were talking about today about people having rules and being so strict and rigid, and that sometimes that can be a negative. So how do
It
you
is.
keep that flexibility to? I don't know, because it's tricky. I mean, at least for me, I'm speaking for a newcomer. You know what I mean?
No,
Like
no,
you see these things, and I'm like, okay, this is the day it is.
yeah,
Don't step in front of the train, and then I don't, and
yeah.
I get crushed. So.
Mhm. And that is difficult, and that's something that we work with every single day,
Hmm.
because the market is so dynamic, and any one big order can change your entire thesis, right? You could be in a trade that's working really, really well, But if a clearing firm is shutting down and selling out a massive position, or a prime brokerage is in trouble, or some trader has fat fingered something, you could, you have these extraneous events that you have no control over, and you have no idea that they're going to happen, right? So especially in a market like this, I have noticed, and I haven't been trading retail that long, okay? But what I have noticed is that it's changed drastically in 4 or 5 years, right? I was doing a little bit before the change of the administration. Now we have someone in the White House who tweets a lot. This last couple of days, he's been kind of quiet, right? And so the thing is, the reactions to those tweets get picked up by algorithms that parse maybe the first two words of a tweet, and then boom, they execute so fast, it makes your head spin. So, you have to use stops in this market, especially newer traders. I know a lot of experienced older traders don't like using stops and stuff like that. Hey, do your thing, man. But for newer traders, and especially the people in my room with smaller accounts, use stops, because the market is very news sensitive. It is hard to trade. It's a bit of a challenging environment right now. We don't have pure balance. We don't have set trading ranges. Our trading ranges are massive. They're like 40, 50 points on the S&P here and there. So it is a little bit hard. And I was like, for example, I was talking to a young guy today, and he's 22 years old, and he's been studying trading for 3 years. He's not profitable. And he told me, look, I want to quit my job and trade full time. I'm like, whoa, 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 don't do that. He goes, well, I said, well, maybe if you do that, you want to have like maybe 2 or 3 years of living expenses in the bank, not including the capital that you're trading with. And he was like, what? It's not going to take a few months? And I'm like, no, it's not. It's not going to take a few months. You are not going to be profitable. I'm sure there are people who, maybe there are. I haven't really heard of a lot of people who have started doing this and immediately got profitable and stayed profitable. Other than the YouTube videos with the guy lounging on the you know he's got his bearskin rug on the Lamborghini and he's lounging on it. I mean, other than
It's
that
it's
dude.
actually, it's alpaca actually.
Oh, alpaca.
Yeah,
I stand corrected.
yeah,
But
yeah.
other than that, dude, I don't really know of anybody who's off the cuff right away trading and making money
Yeah.
consistently.
Right.
And if you are, kudos, great. But the patience part of this thing, because I said, look, you're 22 years old, you got 50 years of trading ahead of you, right? I mean, you could, it's not labor intensive. It's not like you're breaking rocks
Right.
or digging ditches or something like that. So when you're 70 years old, you could still be sitting at a computer trading. So, it is a very long marathon. And the only thing that really helps you sort of gauge when to take a trade, when to manage yourself out of a trade, when is watching price action. There is no substitute for screen time in this business.
Right.
Because once you start looking at how price behaves, it's one thing to have a level, right? And that's why I don't, sell levels, or I don't call out trades, is because today, what if I called out trades and it was wrong and my whole room lost money, right? I would rather have you see the market. And the nice thing was, this is the cool thing, right? Even though that I was calling out sort of nuances and things that were going on, people took that and were able to use that information usefully, to trade well with proper risk and proper. I didn't feel comfortable myself trading, but it's nice that, the information that we were talking about and the way we talked through a market, like we talk it out, and we discuss it. And that sort of really helps people grasp the concept of structure and how price behaves at different, structural points. It's fascinating. I'm still blown away by it.
Hmm. Now, JJ, now that you're teaching people how to trade, guiding them along, based on your experience, what do you think is the biggest struggle for people managing trade?
What I see, and this is just what I've seen in the last 8 weeks, is that there and it, and I've seen this. I saw this right away when we started the room, right, and less so now, right. And but the first thing I saw that people were looking at every trade like a lottery ticket, right. This trade, I'm going to retire, right. This trade is going to pay my mortgage and buy me a new Bentley today, right? I am going to make 20 handles I'm going to do 4 trades today and they're all going to make 20 handles, right? So they have these unrealistic expectations and that's okay, right? Because I had that too. It's until the market starts talking to you and you listening and being able to decipher it, right? It's like getting into a car and not looking at the gas gauge. You're trying to go from Vegas to Los Angeles, but you only got an eighth of a tank of gas. It's not going to make it, right?
Mm-hmm.
So your internals are telling you, okay, you might be long here off this counter rotation or off this inventory imbalance, but the buying here off the low is just going to be short covering and there's going to be nothing behind it. So make sure you take your two handle or points as we call them, handles.
Yeah.
Take 2 or 3 and get the heck out.
Yeah. Mm-hmm.
And don't complain about it because that's the market you're given to trade today.
Mm-hmm.
Tomorrow the breath might be 10-1 positive, and you might have a 40-point trend day. But hey, right now, right, it's just kind of back and forth.
Right. So yeah, so having newcomers not going for the home run. So that's your biggest thing you're seeing is
they're
people
not lottery tickets.
Right.
And remember, when you're starting out, people are like, let your winners ride and move your point, like move your stop to break even, right? Well, no, take some profit. With these small accounts, right? Take that point, right? It'll build up your confidence at first, right? Because otherwise it's going to come back and stop you out and you're going to lose money,
Mm-hmm.
right? So slide your stop up with it. That's what I tell people anyway,
Right.
right? A lot of people don't believe in that, but pay yourself. It is a business, right? If you were at a store selling something, and somebody came in and wanted to buy it at a certain price and they were a penny or two off, chances are you're going to sell it to him or that person, right? If you're selling donuts for $5 a piece and they're coming in and bidding you $4.99, sell the donut.
Mm-hmm.
Don't be cheap over a penny.
Right.
Right. Take that money, build your account,
Mm-hmm.
build up your database of experience with price action, because that's basically what we're doing every day that we look at this thing, right? It's like our brains are databases, and the price action, there are different types of price action, right? And different types of market dynamics. And we absorb all that information on a daily basis. So just, we're loading our database every day. So the next time you see it, and then you see it 2 or 3 times, you're like, oh, okay, I see what's going on. And then you can react,
Mm-hmm.
But that takes time. That does take time. And you have to be a little kind and patient to yourself in that meantime.
So when you trail your stops, how much in the green are you looking to be before you trail your stops? Because I've had times where like that's the confusing part to me. It's like, oh, I'm up a point. Do I trail my stop up? You know what I mean? Like, do I wait till I get to
It
3 points?
depends.
I know it depends, but what do you normally find yourself?
It depends. It depends on the context. If you're looking at a situation like that and you're up a point and you've got like positive 1.08 New York breath and maybe negative NASDAQ breath, right? And the action's slow and the range is tight, you might only get a point. You might not get, if you're buying overnight, say you're buying the point of control, it might not get to value area high, right? It might not have enough gas.
Yeah.
They might step in and sell the hell out of value area.
Man, see, this is
right?
this is the frustrating part. This is the frustrating part about trading, like
it is.
It's like almost like with poker, like, at least poker developed to a point to where it's like it's very mathematical based, but like complex math, right? Like, oh, you do this 60% of the time in a situation and this 30% of the time, right? So you don't have two options. I know this is what I can do.
Yeah.
I just have to figure out the frequency. Now with trading, it's like, well, it's the context and it's this and like, ooh, it's that. I'm like, damn, like I just, it's tough. And I see why it takes a long time to develop into a profitable trader. You know what I'm saying? Like, because, I find that stuff, trailing the stops. Now, I do think it's very beneficial though, Jay. You know what I'm saying? I think it's like, because it hurts so much being green in the trade and then you getting stopped out in the
Yeah.
red. Tilting.
And for guys, there are guys who will berate me and say that I'm giving bad advice to do that. But when you're a brand new trader, there's nothing wrong with booking some wins, right? Because especially in this market, right? You could be up, you could be up 4 or 5 handles, right? Why don't you trail your stop at least to book 3 of those,
Yeah.
right? Because he could tweet and that whole thing could be reversed in a second,
Yeah.
right? And it's just the environment. Like we're on a walking on eggshells environment in this market,
Mm-hmm.
right? And you have to protect your gunpowder, right? And if you have wins, there's no shame in booking small wins when you're a new trader. Hell, I don't think there's any shame in booking small wins ever.
Right.
You know,
Right.
it depends on the market. When we get that nice, beautiful, flowing order flow, where you can see, that there's secondary waves of buying, then and then by that time, the markets have changed. Those things might come back. You know, when you get that nice follow through, right? We had a trend day a couple of days ago, and I couldn't even recognize it's been so long since we had a proper trend day. You know,
Yeah. I find those are
so
harder to trade sometimes because it's like,
they are.
it's like just trending. And I'm like, oh, it's already come up so far. I don't want to jump on. Or,
Yeah,
the reverse, of it. But,
and then there's that inventory adjustment when it stops one time framing, and then you're wondering, is this an inventory adjustment or are they going to sell it off? Because sometimes they have sold it off.
yeah.
So this market, the market's doing its job. Its job is to separate us from our money and keep us guessing.
Yeah.
It is doing a fabulous job of that.
Yep. Yeah.
What kind of job are we doing?
Yeah. Yeah,
Right?
exactly.
That's what matters.
Now, let me ask you a question. You tell me what I can do to fix this, right? I'm finding, at least lately, right? I feel like I started off pretty well trading, right from the get go, and it could have been sheer luck, you know what I mean? And I'm sure luck did play a factor into it. Now I've been, a little bumps in the road, and I'm starting to notice that my losses are bigger than my wins.
Okay.
Is and I know it's a small sample size, right? This is only the past couple of weeks. What could that be? What could be the symptoms?
Maybe a little overconfidence.
Mm-hmm.
See, I never had that. I never had it when I started, and automatically, because I noticed with you when you started trading, you started booking wins right away, right?
Yeah.
Um,
Yeah.
and and that was one thing I noticed, that you weren't losing a lot on a lot of trades. You were very patient and you would wait to trade. Um, and and I've heard of that, but it's never happened to me. So um, because I got annihilated, from the get go. Right, I started retail trading. It was like lose, 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 lose. I'm like, what the hell, right?
Mm-hmm.
And it just, and it took my ego down a few pegs. And you're like, wait a minute, I can't trade my way out of a wet paper bag. What the hell's going on here? So it's completely different, but I would think that would be a little bit of overconfidence. And what you might want to do, and here's the other thing, right? You
Mm-hmm.
might want to just kind of chill on the trading for a bit and watch price action until you get back into it, right?
Mm-hmm.
And then
Mm-hmm.
maybe, also
I've already
start.
Jay, I already got pricked with the needle, man. I can't go back now.
Oh no, you got to go back, right?
I,
This is not, the problem. The problem about progress in trading is it's not linear, right?
yeah, that's for
This
sure. Yeah,
this
and
this
anything.
this
Mm-hmm.
this stuff is not linear. It's not just go straight up. It's go up, go sideways, go back down, go up. It's like snakes and ladders, right? And you kind of got to get into the groove of, oh man, this week, maybe I am not so smart, right? Maybe I'm not seeing it. The market has changed.
Mm-hmm.
You will notice that the market has changed since the China talks, right? Price action's a little different. We have these gaps. We break higher. We hold higher. Values higher. We're spending time at higher prices. But there isn't that big push of follow through buying, right? It's sort of a creepy kind of, it's kind of creeping up the stairs.
Mm-hmm.
So, you have to understand, when I started, the price action was great. I was making, after I discovered profile and a little bit about it, I started making money, right? They were smooth. There was follow through buying, and then they started like really with the heavy with the algos, and I got chopped up like a chopped salad, right? Because it was back, it was up one, down two, sideways three. I was like, what is this? It's like um, it was horrible. So I understand. You have to understand markets change. You have to adapt with them, and sometimes when the price action changes, when you have experience, you'll go, oh, there's something odd about this price action, right? Something won't sit right with you. And then you'll watch how price behaves around a very visual reference. And usually, lately for us, it's been stopping at a reference and reversing, right? And sometimes that reference gets front run. So it shows that, there's a good responsive buy or a responsive sell off that level. And today that didn't happen so much. And that kind of screwed a lot of people up, right?
Mm-hmm. Mm-hmm.
Because the nature of the order flow had changed a little bit. So that's why we get paid the big bucks, right? you know,
Yeah.
we have to figure this thing out on a daily basis, right? And agendas change, right?
Well, that's what keeps it interesting, though. Every day is something different. You got to keep up with it.
Yeah.
Definitely better than a routine, same old thing. Okay, I want to run a theory.
Oh, and another.
Go ahead.
Oh, sorry. And another thing. And if you take a break and start trading again, size down, right? Keep your size small until you get comfortable and you're seeing it again.
Mm-hmm.
Okay, go ahead.
Absolutely.
Sorry.
All right, I got a theory I want to run by you. I want to see what you think about it. So once a trade is over, right? And I'm talking about like in day, right? You make a trade, whether you win or lose, forgetting about the trade right then and there. And then, you can go back and review it later. I think like I found myself like focusing like, as soon as the trade's over, I'm starting like to analyze it already. And then I think whether it's good or bad, it kind of disrupts my flow
Oh,
in the day.
okay.
You know what I'm saying? And it's
Yeah.
like, okay. And it's kind of like, it's like, okay, forget about it. Keep your focus. Okay, then I can review this after the day. Because especially the bad trades. Because I'll go
Yeah.
on tilt. I'll be like, oh, I should
Yeah.
have seen this, blah, blah,
Yeah.
blah. And then I'm
Yeah.
pissed. I got to go walk outside. And
Yeah.
then I come back and it's like, oh, I missed a good trade.
Yeah. I don't know
Because of
that.
my inability
Yeah.
to stay calm.
Yeah.
And
That is that tilting mechanism when you have a couple of losers. Um, it's funny because that used to happen to me, and now it doesn't so much, and I'm not sure what's changed.
that's experience. It comes with
Right?
experience. Yeah.
Maybe it's experience. It's maybe the longer I live, the more I see that so much of the little things don't matter, right?
Yeah, sure. Sure.
And I think I'm so focused um, on looking how the structure develops, where I used to lose focus, and I'd look at internals, or I'd look at and I'd start like looking around and where did I go wrong? I'll go right back to profile. I'll go back to profile and I'll start writing out. Okay, so we had a bad trade, great. Lost a little bit of money, lost 5 ticks, 6 ticks, whatever. Um, what's going on now? Okay, what changed? Right? They could be just some stray order flow knocked you out of your position. Right? That does happen. But then what I'll do is I'll start going, okay, value is overlapping to higher or value is gap higher, point of controls up here, we're pulling back here. Are there any references on the left that I missed? That's what happened today with me. And I don't know. I read this a couple of days ago and it said, simplicity will bring lasting success.
Mm-hmm.
Cut out 90% of the stuff that's going through your head and focus.
Yeah.
Right. And I've kind of been doing that almost by, I didn't really do it consciously, but as I keep falling into these charts and into this market, I I keep doing that more and more subconsciously that I'm just so zoned in on profile. I'll forget to eat lunch or things like that. And I'm not saying that's a good thing, right? But that's where the shift came from, because I would like, oh my God, I missed this trade, or I screwed up this trade and it caused me to miss this one. And now these are just like random events. Like there's always going to be another trade, right?
Hmm.
And I think because I've been retail trading longer now and looking at it, I realize that every day there's an opportunity. There's some at night. Maybe there isn't today, right?
Hmm.
You know, it's like you go fishing and there's no fish biting, right? You really can't get mad, right?
Hmm.
Um, there's just no fish that day. You shrug it off and you come back to the pier the next day.
Right. Right.
So, and I don't know, but I'm 50 and you're 30, you're under 30. So, there is, you have a lot more, energy than I do. Right.
Mm.
And so I'm kind of at a point, like the other thing too, with my health and, and that sort of thing, uh, you kind of start not really taking life as seriously as you used to,
Hmm.
right? And maybe I'm not taking myself as seriously, and that kind of helps, right?
Yeah. Of
I'll
course.
I'll be in the room and I'll laugh at myself. I'm like, oh, I missed that one, and to be able to laugh at it, it kind of reduces the stress of the whole thing, right?
Hmm.
And kind of enjoy the process,
Right.
right?
Hmm.
Because I love the market. I love learning about markets. I love learning about the mechanics of the market. And that sort of helps me get over the frustration, right?
Right.
And
Right.
it's like this always constantly evolving puzzle that we're like trying to figure out, you
Right.
know. Um,
Exactly. No, that's great advice. Yeah, no, I mean, especially not taking yourself serious and just like understanding this is a really, I mean, especially starting out and being new.
oh yeah.
And, at least I had I feel uh, in my stage of development, and like I went through the whole process of learning poker and how hard that was for me to get to a point to where I could be profitable and do it as a profession. And so I have no like grand delusions of learning this, that I know this is going to be tough. I know this is going to be, this is going to be a struggle, and and just enjoying the process like you said. So I thought that was phenomenal advice. All right, and with that, we're going to jump into the listener questions. And so everyone listening out there, obviously ask us any type of questions, leave it in the comments on Twitter. We put a thread up every week. You can leave it in the YouTube comments, DM us, whatever. We enjoy answering your questions, trading related, non-trading related, personal, whatever. So today, our first question comes from at Bel Air Trader. My man Ray, this time I have a question for our lovely at VWAP Trader 1. Many times I got in a trade that could have been profitable, but I end up scratching it because I don't want to lose and the market takes time to go. Any idea how to overcome that? Thanks, guys.
uh, Been there, done that, got the T-shirt. I know exactly what you're going through. And the only thing that helped me was learning the structure. And a lot of the times, you wonder whether the trade location is right. You think about it. Once you learn, what helped me, now this is just the way my brain sees information, was when I could see structure, when I could see that shorts are trapped or longs are trapped, that sort of thing, and I trade, take the counter trade to that. Um, I had more confidence to stay in the trade, not because of the internals, uh, but because of what the structure was telling me. When we stop one time framing, when single prints fill, all these tiny little things. Once I started getting comfortable with them, and then I started seeing that over and over and over again, you put your, you using structure to trade, as Jim Dalton says, using a structural entry, a structural stop, and a structural target, and varying that target depending on the context of the day, and managing your expectations depending on what the market's doing. That really helped, and that is a function of time. um, what you need to do is, you need to, maybe if you're in and out and in and out, maybe just stop and watch the market for a while, make some notes, find out, look at areas that you're interested, and watch how price behaves. This is another big thing. When you see and you start figuring out the way price behaves at where you're going to take that trade, and the way to do that is not take the trade, just watch, right? look at how price, if you're buying at 50 and it hits 50, does it slice right through 50 and go to 45? Does it slice through 50, go maybe down a couple of pennies and then bounce back up? Does it go through 50, spend a little time down there and go back up? Or does it not even get to 50 and bounce right before, right? Is it front run? That'll tell you what kind of sellers are in the market. That'll tell
Mhm.
you, you know, um, that sort of thing. And the more you start looking at that, the behavior of price, because remember, we don't trade price, we trade value, but we we look at how price behaves, and that is the biggest thing that took me time. Whereas, like, I knew this level, and then I'd see it and I'd go, oh, I missed it, but I wasn't paying attention to how price was behaving because I was so nervous about taking the trade that I forgot to look at how the price was behaving,
Mhm.
right? So it's easier said than done, right? But after a while, you'll start seeing it, and on the days you don't see it, don't trade, right?
Repetition.
It's
Hmm.
repetition, yeah.
Repetition. Shout out to Money Mo, Bel Air trader. Make sure you put the powdered sugar on his crepe. Next, next question comes from at Erica D Realty. I've been really struggling with this one. Is cereal soup? Hmm. Uh,
That's all yours, buddy.
n- I mean, I guess it's interesting. I mean, I would say no, right? Soup is hot. Soup is warm. Cereal
Except,
has milk.
except what is it? Vichy Soise is supposed to be a cold soup, the
Oh,
French soup.
vichyssoise? I don't know. We're
Yeah,
gonna have to ask our our friend Mo. I don't
one of
know.
those.
Is it French?
I don't know. Obviously, yeah. So anyway, that's all I know about the soup thing. What an odd question.
Yeah. Well, we take any questions, but no, I would say no because soup is hot or soup is warm.
Okay.
But yeah, shout out to Erica D Realty for the question. And go, yeah, she, I know her. She does realty down here.
I
Um,
guess I guess
so
spot
shout out. So yeah,
you.
so shout out to her realty, company. You need a house, hit her up.
Yeah, exactly.
Next question is from Codester. Um, I'd like to hear about market makers' secret signals they flash at each other on level two, like the famous 9/11 bid ask signal. Is this real or myth?
I don't know about the 9/11 bid ask signal. We did used to communicate in the old days, but that's 25 years ago. And most market making is electronic now, and it's run by either Citadel, or Virtue, or these big massive firms. That sort of stuff. The old collusion between market makers isn't so prevalent anymore. Yeah, but those were the good old days. You because market makers at big market making firms, their phone calls were recorded, so you couldn't. There
Mm,
were certain things you couldn't say on the phone. So, if I was talking to Knight Securities in the old days, because I knew the boys and, I'd spent time drinking with them in the city, if they had a big seller and I wanted to find out who the seller was, if it was an offshore seller, they would cough twice, that sort of thing, or it's like they'll say, oh, the sellers, they'll go, oh, it's really cold today. It's really cold, which means the seller's coming from Canada. If they're
mm,
back during a deal, so that those things we kind of did in the old days, and you'd put a 666 on the old level too. Sometimes to joke around with people and stuff like that, but nothing, that stuff isn't really prevalent anymore.
all right. All right. Shout out to Codester for the question. And that's all we got today for listener questions.
Okay, good stuff.
Yeah, and just reminder to everybody out there, if you guys haven't already rate and reviewed our podcast, we'd really appreciate that. Thank you very much. JJ, parting thoughts?
Not really. Just this market's getting interesting. Be careful out there, and let us know if you have any questions or if you need help with anything. If you're blowing yourself up, stop trading. Give us a call. We'll try and we'll try and get you back. And if we can't, we have lots of resources around us. We have lots of really great people like Canny and the gents over in England. They'll take the top off your head and give you a tune-up.
Mm-hmm.
You know,
Mm-hmm.
so reach out if you need help.
Absolutely. So, for the director of Dirty Tricks, I'm Paulie Walnuts. You guys stay safe out there.
Have a good night, everyone.